All right, so Stevie, you got your finger on the pulse of this whole situation. What's going on when it comes to the holiday travel season, or the summer travel season, I should say? Are you seeing a slowdown in demand compared to other previous years post-pandemic?
Well, we're seeing a few different things go on, and when you look at the entire market, you have to think about it in segments. Budget travel is certainly having the biggest impact from the uncertainty that's going on in the market. And because of that uncertainty, we're seeing a shortening of booking windows. People are holding on to their money longer and waiting to book those properties last minute. And then also, when you look at that, really the luxury properties are doing much better, and along with the larger properties, as to where the smaller properties, and especially properties that are in the metro areas, are really struggling to keep up with last year's demand.
That was going to be my next question for you, Steve. Are you seeing a difference when it comes to price point? It sounds like higher income people, they're more willing to spend when it comes to the summertime right now compared to other previous years. Again, post-pandemic. The pandemic was a bit of an outlier. Are you seeing their stays for the higher end? Are they just as long, longer, shorter?
Length of stay is pretty much flat, believe it or not. So that's actually a good sign. Usually when we start to go into a recession, we start to see these shortened length of stays, and that's just not happening. And not just within the portfolio, our portfolio, but, according to AirDNA and Jamie Lane, who's their economist, across the United States and North America, we're not seeing that shortening of length of stay.
I want to ask you about also airline travel. Here in the New York area, we're having a lot of issues with Newark Liberty Airport, a lot of delays and other issues related to flight controllers and other things like that. You have a number of properties in the Caribbean, also Belize. Obviously, you have to get on a plane to get there. Are you seeing customers shy away from destinations where you have to fly to? Are they more focused on driving, or is that not really an issue in other parts of the country?
No, the drive-in destinations as opposed to the fly-in destinations, we're not seeing much of a differentiator there. Where we are seeing that is where international inbound traffic is important to that market. We're seeing, a drop of about 12% of Canadian traffic coming to vacation rentals, and also about 18% from Germany. So it's significant.
What about here in the U.S.? Is it also a double-digit decline when we're talking about destinations that people have to fly to?
No, when I speak of that, I mean that's international inbound traffic. People come from Canada, coming from Germany.
Got it.
Places that were dependent upon that international traffic, we're seeing that sort of decline in those demand sectors.
But what about people here in the U.S.? I would imagine travel to the Caribbean is a little lighter than it would be during the wintertime because it's warm here in the U.S. But what trends are you seeing when it comes to U.S. customers going to Belize or the Caribbean or other international destinations?
Again, holding on to their money till the very last minute, making bookings at the very last minute. We're seeing that overall pacing is down by about 2.5%, but we get a quick recovery because it's actually down a little further until the last couple of weeks, and then we get a rebound. Most of the disruptions happening in metro and large city travel and demand in those areas.